All right. Well, I just want to say good evening to everyone. I'll do a little review here for about a few more minutes, and I'm just hanging out with you guys tonight. We're going to go over the futures tonight because it was such a good day for just trading. Maybe some people didn't think that, but it was pretty organized. I had good patience today. Good patience, good discipline. The setups were coming in clear. I expect a banner day tomorrow. We dealt with a lot of different questions in the room. Hopefully everyone's catching on to the methodology that might be new. The question in the room right now, how far are we off? And this is something that I haven't checked in a while, but we're going to do a couple things tonight. We're going to take a look at the overall markets just to kind of feel that we are in a pullback. And let's do this first. Let's go to Jeffrey Hirsch, Stock Trader Almanac. Our good friend, Jeff Hirsch, a big friend of the station. It's my claim. It's my star. It's my CNBC connection. We had the kids in the same school and stuff. So Almanac Trader here. Election year drawdowns happened. Average pullback 13% since 1952. All right. So after let's go into this, although this is from the Stock Trader Almanac. After 5 straight months of gains and numerous new all-time highs, recent weakness and corresponding spike in volatility seem unfamiliar. So let's mark that down. We got to check the volatility, which is the VIX. Despite lingering inflation and escalating geopolitical tensions, S&P was down 3.8% from the closing all-time highs of 52, 54, 35 on March 28, and through its close on April 16th. So 3.86%. We were just going to measure that out, but Jeff has already done that for us. This is well below the average historical largest drawdown during the election year. Were it not for the steep decline in 2020 and 2008, election years have tended to enjoy relatively modest drawdowns. Of the last 18 election years, 11 experienced single-digit drawdowns. The smallest was 3.5% in 1964. Goes on here and talked about the drawdown, but so we have this a signal. He goes a lot with the MACD. MACD very similar in signals. Very similar in signals to the stochastics. So we issued the best 6-month MACD seasonal sell signal here in April. On April 2nd, when the slower MAC indicator applied to the Dow and S&P both turned negative. We also identified, if we look at what we looked at and why we thought maybe the market would pull back, take a look at this. It might even be a little bit... let me see if we could bring this up on the SPX. This right here, this little candle right there, it made it to high. We had a double top and a lower stochastic rotation, a very sneaky divergence, or real steep, real steep. I mean, this line from here to here, it's very steep, and it's a very hard one to realize, but it was. Gapped up, sold off. That was the key right there. Never really turned up on the stochastics, and we started to sell off. Now we've eventually gotten oversold, and this is again on the S&P. We don't get oversold too often. Last time we got oversold on the daily was back right after January. Oversold doesn't mean that we stop going down and it's an automatic bounce, but it sure is closer to the bottom than we've ever been. And we'd like to kind of get all the time frames lined up. So we have the hourly set up. We also have the daily we have set up. Now we also have the hourly set up going into tomorrow. Now tomorrow markets, the SPY will move around a little bit more earlier in the morning before the cash opens up. We might get some other, cross signals. We'll see how the market right now is up 13.25 and rallying. So again, we're oversold. We have a gap area right underneath us, and we're just about there, and that's important too. So let's talk about that. That gap, that high there. We can talk about the high. If I could Let me clean up the chart here a second. All right. Can't tell if that's a candle. Yeah, that's it right there. So 49.87. 49.87. It's right about there. And we're off of that just a little. Let's put a line down there. Now that's going to give or take a point or two. All right, we'll call it 49. Let's call it 49.90. If I can move it up a little. I'll leave it at 96, and we'll put an alert in here that we get alerted to approaching gap fill. That might be a pretty decent. We don't get many of those, so that's definitely something to watch. So there's a nice gap back there. There's other gaps below us, but considering we're so close to this one, that looks pretty good. Is there a trend line underneath us? No, it's a rogue line there. And that's about it. So, I mean, I'd love to see a divergence on the hourly go long. Tomorrow, maybe the 5-minute time frame, we get a reversal. If we even move down a little, then we reverse. We're looking for all that. It's going to be Thursday tomorrow, so that's a good day for us. Let's take a look at the NASDAQ. We'll take a look at the NDX. And, pretty much a mirror image of today's ES. And pretty much a mirror image. Oversold. Same thing. January, last time it really got underneath the 20 line. Back before that was last November. And all these eventually moved up off of this. So, again, these could be very good levels that we're approaching. I wouldn't make any big moves on this, though. I mean, like I said, this is just one indicator of many. We like to have multiple indicators line up. I mean, we like to have multiple time frames, an area of support, maybe a divergence, maybe a channel line bounce, maybe multiple time frames. And let me turn that off in the back here. We're going to play tonight while I'm doing the video here. We're going to play a little Delta Blues overnight. Delta Blues. Let's do that right now. I'm going to pause the video. Be right back here. All right. So NDX. So we're about 3.5% off the highs. Standard correction areas, they throw out that number, 10%, but we're not even at 5%. Definitely could move a little lower. We're not going to worry about it. We're going to worry about intraday moves. Making money on these intraday moves. That's what we're going to focus on right now. We're going to go to the chart here. And you got to see some of this. This is today's action. I'm always mapping the market. Right before I got on here, I was jumping on here back and forth a little. You might have heard me or not. Kind of talking about this picture perfect 2050 bull flag, 2050 bull flag, and with a divergence kicker. So you had a pullback. It held above the 50. Stochastic stayed embedded here above 80. And we had a little divergence from that low to this low to that low, that low to the higher low. That was killer right there. Killer. So that was a really good setup. And that's the type of setup you should take overnight. It's fine. You don't have to worry about the no liquidity. You know why? Because you're trading with bogus shares. If you're using your prop account, there's nothing going on. You're not going to affect the markets at all. But you're going to be able to capture these moves, which is great. You're not going to have to deal with the algorithms, sell programs, buy programs, and the whippiness of the market. You get a good quality divergence overnight. Sometimes it's worth sticking around 11 o'clock, 12 o'clock, 1 o'clock. Definitely 3 o'clock a.m. Eastern Standard Time. That's when the action starts, European Open. So let's go back in the history of the day, and we'll see where we And again, when we never really go back. What we do is we identify it real time. So if I go back and I see something and mark something off, it's typically because I'm looking for something. So we saw a little divergence. I think I saw a little divergence here. This was 8 o'clock, and we got a nice pop on that. And I actually had that trade. I took it right off, but we could have kept on going pretty good. Market opened up here on the at 6 o'clock, and now we go back into yesterday. Now yesterday, pretty cool. I mean, at 3:40, I remember going this, and I said I don't like to trade after 3:15. But if there is a divergence, we will call that divergence. And sure enough, right in front of me at 3:40, there was a beautiful divergence that set up. And what was really nice about this, it was a 44 divergence too. And today was a good example of the 44 and how powerful that indicator. For those out there who might be catching this video for the first time, if I send this out as a video, but as the members, you already know, I work with a band here, 4 oscillators, 4 stochastic oscillators. And the way I have them set up all represent different time periods. And each one, of course, works with the other ones. And we have different setups by, looking at the different patterns that stochastics makes. Mostly it's for divergences, but we also know that the divergences happen on multiple time frames. We could see that in that 60, that blue line right here. This is my 44. This is my baby, and that's why I keep it up here. I have never seen a 44 divergence fail. And when I say fail, not perform, in a very aggressive way to the direction of the divergence. In this case, it's mostly going to always be a buy side with the 44. It just works so well. So that is your go-to money trade, and sometimes we miss that. And if we miss it, that's our fault. We have to work as a team together. And I was yelling at everyone today because we missed one, and it's my job really to get these out to you, and I try really hard, but I will miss some. But if you see something, that's the important thing. We all make money off of this, so we all work together. Here was another 310. There was another nice divergence here. Now, even with the divergence, we said we took the divergence and take it off on your first rotation. If you took it off on your first rotation, right up around that 20. You can see it came right back down. You don't need this aggravation. You need to identify that. And this was key today, because today all these setups happen in a way that it's very slow, and you kind of could feel it happening. There's 2 stages to a divergence that we look for. 2 stages. Stage 1 is a low, a recent low, and I call the 30 period low. At least 30 periods, meaning we go back 30 candles. We want that. We want to make sure it's a significant low. And then what we want to see is a little bounce. And sometimes we won't really even see a little bounce, but we'll see the stochastic rotation. We want that to bounce. We want that to get back above the 20 line. That 20 line, stochastics have a range of 0 to 100. 20 and 80 are 2 markers that kind of, were a default overbought and oversold levels. We don't use it as overbought and oversold. We use it just, we use stochastics for a divergence. But we also know that the rhythm of the market sometimes can be seen very easily by following the stochastic. So if you have a divergence, that's almost a guaranteed move in the direction of the divergence. High level profitability, as long as you take your profits. If you get in late here and you don't see it on the way, and it's, I get in here and it pops up here, and you kind of hold on to the next thing you know, you might be down a little. This takes focus. It takes you to be able to read the divergence and know what the divergence is, so you could see that stage 1 is there. Once ever I see stage 1, I get on that Zello alert. I say this is a quad rotation, or this is approaching a divergence. That means you keep an eye out for the things that make a divergence. What makes a divergence? That little bounce and a fast little move down and a higher low on the stochastics. And that's exactly what happened. Right when we see that turn back up, bam, we're in right there. And even if you're in late, you're probably still in. And you know what? We're not sticking around. The market's been down. We're underneath the 20-period move. We're underneath the VWAP. We're underneath the 200-period moving average. Even though it's on the 1-minute time frame, this is a business. So you get in and you get out, and it starts. You hear the crickets come in. Quickly you move up there. You don't care. I mean, don't smoke the hopium here. Just take it off and lock that in, and then wait for your next setup. And here's your next setup, and do the same thing. And it gets overbought. The odds are you're going to come right back down. And sure enough, it did. Maybe you didn't get the full amount. That's okay. That's okay. You don't have to get the full amount on anything. All right. Now, those are divergences. Divergences in flags are beautiful. Lots of times we'll see that. Here was a slight little divergence in a flag. You can see the pullback. It's holding the 50, a little higher low, and a breakout. Now, I'm able to see these. Looking at them all day long for 20 years. I see divergences in my sleep. So it's not going to be hard to identify these when they happen. And I call these, and I'm calling these. But it's up to you to push that button to get in there. Place your stop right underneath it. No harm, no foul. Most likely, if that fails or whatever, it came down, wait for the cross up. Wait for the confirmation. All right? Wait for the confirmation to move back up, and you could put that pivot area in. Because if it fails and breaks back down, that's giving you a signal. Most of these will work right off the bat. You're not going to get that pullback. If it does show weakness or fails, you'll probably be able to see that happening even before any real pain comes. So you're winning on both ends here. On absolutely both ends, you're winning. Big channel, big reversal today. Just a lower trend line. Had X marks the spot that was an old trend line, and the lower trend line came into play. We had a series of nice bear flags today with the embedded 60-10 and the fast rotation. Fast rotation up, close under. This one actually extended to the 50 and then dropped off. But all these, when you rotate up to the 20, you're down here. You rotate up to the 20 right here. I didn't even mark that off. That is your bear. That's your small little bear flag. It's as long as it's away from it pulls away from the 20, drifts back up to the 20. Fast rotation. This and stays under 20. That is your bear flag. Bear flag, bear flag, flag. The opposite is the bull flag. Only things you should be paying attention to. Divergences come first. Here's a little divergence. Here's a low. Here's a low, low. Here's a low. Here's that little dip up here, a little lip. And we get that little power move up. Not a lot, but enough to get a couple of ticks to a point, maybe even 2 points. These are big moves, actually. These are big moves. I mean, from the low here, 90, to the 50-period moving average at that point is 5103. That's a 13-point move in 3 minutes. If you can't pull out 3 points out of that, and that's what you're going to get. And you got the fast rotation, and that tells you when to get out. That is the key to success right here. It's not the holy grail, because nothing's going to be perfect, and you will get smacked around on occasion. It could be just a bad luck or a bad, market maybe has some news. Maybe there's no volume, it's just kind of a vacuum. Certain times certain things happen, but if you put that trailing stop in there, you don't trade over your head, and if you're using the prop accounts, stay with the MES, 3 to 5 contracts. Work on each trade. These trades, all day. We like to average $200 to $400 a day trading this way. Just and it's very risky. That's very low risk. Excuse me. It's not risky at all. I was going to say, because you're trading the MES. It's not like if you lose a couple points, you're not going to get your drawdown 2 down. You're protecting yourself, because the other ones, all right, so 1 didn't work out of 9. All the other ones are going to work fine. And we're going to be able to tell you which ones you could add to, like which ones you want to step up with the ES trade and really qualify quickly. Those levels come out too. It's just all about waiting for it. I know the good ones. We know the 5-minute ones. When the 5-minute and the 44th line up, that's where we want, right here. That's the big moves. 5-minute right there. Very, very simple. And not too simple, because a lot of people are not even familiar with anything about this. So I understand. I'm not trying to complicate things. I've been doing it so long that it's I know there's a path here, and it's an easy path to follow. You have to develop the discipline and the patience to wait for these setups. That's all. You'll start to learn the ins and outs of divergences. You'll start to learn the ins and outs of the price and how it works with the lows. And relatively speaking, if you see a low here and you see the price come down but a much higher rotation, that's usually a sign that something's going on. And that's something that I pay attention to all the time. And if that happens inside of a downward channel, that's our clue that we're probably going to break out. That's a little harder because, you know, you're trained. I'm teaching you how to find that real divergence with that lower low. But you also eventually, like on a bigger scale or more setups and, you know, more of an expert approach on this, you can
Tradometer YM overbought.
You can start to see other, you know, you look at this so much, you start to see things that, you know, you'll be able to identify things and be comfortable, you know. Here's a 14.3. Whenever a 14.3 sets up at the 9.3 doesn't set up, that's even a better setup. And that's a 14.3 with a relative divergence. Relative divergence usually have some candles that swipe down, but the majority of the closing prices are all equal. But the stochastics are not equal, especially on the 14.3. There's a much, you know, there's a nice, and again, it's key to close and move up above that 20 line. All right, that really, you know, here's your low back under 20. We want to hide the lower high, the higher low. Talk too much. The higher low to be above 20. You know, like I said, we try to get a little bit above the 7 degree angle, 6-7 degree angle. This is probably borderline, but because it's above the 20, and because it's, you know, I can even see the 40 here as a slight divergence. I know that's, and you know, and seeing these things all the time, the closing price, double bottom, higher on the that's key for me right there. So again, what are you going to do from 2 o'clock until the next setup? Well, you're probably going to try to trade this market and get chopped up. But if you wait and you got to your next setup and you trade that all the way up, and you have the next thing, first of all, your blood pressure is not going to be that high. You're going to be, you know, you're going to be super successful, and you're going to develop you're going to develop that discipline and patience, because as you continue to do it, when you apply it, each day it kind of cements in, and you realize, why would I do anything else if this is working for me? Why would I change the whole system? Why would I try to reinvent something that works so well? All right. So that's a little update on that. Very easy to read today's markets. Let's see where we are right now. We might actually have a sell signal coming up. Nothing yet. Again, still very good, strong strength here. You see this 60 is really embedded up here. It's at 82. This keeps on getting a little higher. It's not a lower high, so we can't really read that too much. Could pull back to the 50. There's nothing there. We know what's there. When we have something, we know it. All right, that's it for the video. Short and sweet. If you have any questions, definitely hit me up. If you're out there from the desire from trade, I will send, well, and you know, I don't want to go too fast for you guys. I want you guys to pick this stuff up from ground one, from the basics, the fundamentals. You know, it's not a lot, but the fundamentals and the building blocks and the 1, 2, 3 patterns and the stochastics and how we set these up in the different time frames. These are all building blocks of the method. Stay within the method. You're going to do real good. All right. All right. I'm signing off. I'll see you guys in the market tomorrow.